Welcome back to the course. Today we're going to be talking about the psychology of trading. This is going to basically help you guys understand, what market participants are thinking when they are trading, and that'll help you predict where prices can move. Also, it just helps to explain what technical analysis is. So in today's video, we're going to be talking about volume, buying and selling walls, the float, the demographic of traders, market timing, and how fundamental analysis plays out mathematically. The first thing we're going to be talking about is what technical analysis is and how it pretty much connects to psychology. Technical analysis is basically a visual representation of the mindset of traders. When you chart price movement, look at volume, or study any asset, you're basically understanding the thought process of the traders or any market participant. For example, if you keep failing to break a price and you have a pretty set resistance where the price keeps on rejecting to go above, that means that people believe that what they are trading or that asset is currently not worth more than that price. And the opposite, if you keep on seeing the price bouncing off of a support level, it means people believe that that asset is worth more than that price. Number two, if you see a lot of volume suddenly, that means for some sort of reason, many traders feel that they have a need to buy or sell an asset. We're going to be going over that later in this video, but that's just a little brief way to put it. Number three, when your price becomes more volatile, that means people are either really undecided, super bullish, or super bearish, a little bit of a typo there. Rather than just sitting there, they want to trade that stock, and that means that you're going to see the price move up and down a lot more than it would be on an average day where people don't really have a reason to be trading that stock, whether it's some sort of news they're trading it on or something they're seeing in the charts that's really bullish or bearish. Volatility pretty much directly correlates with people wanting to trade at a very certain time. Now to talk about what volume is. Volume is the amount of shares being traded within a specific period of time. Now when you are viewing volume, you can see these volume bars at the top over here. You want to make sure it's on a higher time frame, which means, maybe you want to be seeing each bar represent one day or a week maybe. Usually I look for, anywhere at least over an hour of volume bars, or just, my charts are usually always over an hour just to get more significant understanding of what people are doing. When volume is low, that means that the people that own the asset don't have a reason to trade it, or it means that people who do not already own the asset have no interest of getting into the asset. When volume is high, that means that people who do own the asset want to urgently trade it, or it means people who do not own the asset, are really starting to get interested and want to trade it and are trading it. Volume is basically a direct correlation with the interest of trading a stock, thus connecting technical analysis to trader psychology. Moving on, we're going to be talking about buy and sell walls. Depending on whatever exchange you use, some might offer it, some might not. Basically, as you see in the top right, we have this green area and this red area, and you can see prices on the bottom. These are basically where people are putting their buy and sell orders. So as you can see, there's a lot more sell orders than buy orders. And at this current price of 235, there's a really steep incline, which means either, let's say there's a really big resistance there where you keep on rejecting to break above. That means maybe a lot of people want to sell there. But at the same time, especially in crypto, that could be what's known as a whale, or somebody with a lot of money who has a really big order at that price. Now, some people might do this to try and prevent the price from going up more so they can accumulate it, or they just simply want to sell at that price. Regardless, the buy and sell walls really help you understand, in real time where people want to buy and sell that asset. And it's going to give you that mid-market price, which should be right around the actual price of the asset. So, you want to keep in mind that these are not 100% reliable. This huge sell wall could be eaten up by buy orders, which means however much amount of money is up here in the sell order, if enough people buy out that order, it could, deteriorate the sell wall. So moving on, we're going to be talking about the float, which is why I have a boat on the top right. The float is basically the amount of shares available to trade at a given time, which pretty much means how many shares the company is offering to be publicly traded. For example, if company A has 5 shares, which would mean that there's less people who can trade those because there's only 5 shares. In order to get orders filled and see price movement, the trader has to sell and another has to buy. So that means if you just really try and visualize it, Every time somebody sells, a new person could be buying. And over time, this pretty much trades who is owning that asset. If 2 days ago you had really long-term investors trading the asset, but then they finally took profit, maybe 2 days later you have really short-term traders who are trying to move the price a lot. Low float means you have less shares available and most likely more volatility. And large float means you have more shares available and most likely less volatility. Now, why does this matter? Because if there's less float, that means that many new traders will be entering and may trade differently than the previous shareholders, like I just said. Think of float as supply and demand. Less supply means more demand. Moving on, we're going to be talking about the demographic of traders. This kind of connects to the float. Whenever you're trading an asset, you want to be aware of who the other people trading that asset are, which is why some, companies such as Coca-Cola, which a lot of people have in their retirement accounts, don't really see much volatility because not many people are actively trading it. They're either holding it or planning on selling it, but maybe not right in the instant. But on the other side, for example, let's talk about biotech stocks. These might be more volatile because the people trading them are understanding that they directly connect to current situations such as the pandemic this year. They can heavily depend on news like clinical trial success. And on the flip side, these biotech stocks, I'm not saying this is certain, but they could see lower demand during times where there isn't a pandemic. And I'm just trying to help you understand that different assets will give you different demographics based on the fundamentals, and you also want to be noting that when you're looking at the technical analysis. You need to be able to react to these other traders of any asset you're in. People are trading one asset differently than another. The way you enter that stock and the way you set up your position has to be different, and this can also change frequently because of the float. So all of this, all of these psychological aspects really just help you set up your plan better and understand the charts more. But on the flip side, the charts are kind of correlated to what this psychology is, and it's kind of displaying that. Now, finally, to end it off, we're going to be talking about market timing. A lot of new traders especially really just try and take gambles if it's a high price, it's definitely going to go down, or vice versa. That's not always true. It is impossible to time the market 100% of the time, and that's pretty much what everybody tries to do, regardless. This is why we see surges and crashes. When people feel that other people are going to buy or sell an asset, they're going to do the same. It kind of creates like this ripple effect. Sometimes this can be known as FOMO or panic selling, but a lot of the times this can actually help if you are able to understand the other people before they make their move. You kind of have an edge against them, and you can, let's say a lot of people are planning to sell, you can be ready for that and then buy, the lower part where the price bounces back up. And this is just something to put in your mind. If, let's say, an asset had two people and one person was only buying and the other person was only selling, theoretically the price wouldn't move. So a lot of exchanges, give you an option to see how many people are buying and selling. And while that can pretty much tell you what's going to happen to the price, you never know what can change in an instant because of psychology. But you also want to be noting that more buying should move up the price and more selling should move it down. And what I'm basically trying to get at here is you need to stop caring, because these things can change really frequently. You don't want to keep on trying to guess. You know what I'm saying? You want to see what happens and then react to that, because that's what most people don't do. They make decisions and then they don't think about it after. If you can look at their decisions and make a better decision off of their decision, instead of market timing, you're kind of like market reacting. And this is how, especially swing traders set up their trades. And this is how a lot of swing traders are able to make a profit off of things that already happened. You're basically studying history in charts, and you're making the future by trading new positions. And whenever you open those positions, you need to know where you want to exit them. And it's not just buying and selling, you know what I'm saying? You want to think about what other people are doing and what you should be doing. And remember that you need to have a strong mind and you cannot be emotional. So I hope this video helps you understand the psychology of traders. Thank you for watching. Make sure to like, comment, and subscribe, and we'll see you in the next video.